Hello friends, welcome to Business Learnings. This is Akeshwar, and in this video we'll talk about Quess Corp Limited, the stock which has corrected from 1200 to 200 rupees. 80% of correction without any such reason. No corporate governance issue as of what I could find out. The sales is increasing, the employee headcount is increasing, management seems clear. What is the reason that the stock has seen such a beating in the recent times, in the past 2 years in fact? And what could be the best entry level for this stock? How much should you hold if you want to buy it? Should you buy it? What kind of returns do you expect from this stock? We'll discuss all these kinds of things. So let's just start the video. The company was established in 2007, and first, before making any investment decisions, we should always understand how does this company make money. So this company has multiple businesses. All of the businesses are people-oriented businesses. The key business that the company earns most of its revenues from is flexi-staffing. What is this flexi-staffing? See, there are a lot of companies out there, from small to big MNCs, and those companies require people, employees. Our company, Quess Corp Limited, supplies those employees to those particular companies, whoever needs employees, right? So flexi staffing, because those employees are still in the payroll of our Quess Corp Limited, and they are the employees of Quess Corp rather than the employees of on paper. They are the employees of Quess Corp rather than the companies they are working for. There are two things associated with it. The good thing is that from the perspective of a big company, they do not have to look for candidates, suitable candidates. They can easily sign a contract with Quess Corp, and Quess Corp will supply these candidates to them. As well as this also saves those big MNCs a lot of money in terms of hiring and hiring the right kind of talent, and finding the right kind of people. Not just the entry level people, but mid-level managers up to higher level executives. Quess Corp helps the companies search even higher level executives, be it startup, be it a mid-level company, all kinds of requirements. So this is their core business. 60% of their business comes from this people services. Now Quess Corp also has a lot of collaborations with corporates and as well as government to train people and to provide specific kind of training which is specifically required in certain kinds of industries. Now it also has a technology side of its business process management, professional IT staffing, and mobile and consumer durables repairs business. So this last one, this particularly focuses on your warranty. If your device breaks up, then they'll fix it and all those kinds of things. It has also integrated facilities management, which means they are in facility management, hospitality, catering services. So all the people services kinds of things that you can think of, this company is there. Not much share in other diversified areas apart from flexi staffing, but this particular company is definitely in all the people services businesses that is out there. Okay, so going forward, this company is focusing a lot on its technological side, enabling the entire technology platform on which it can grow, which makes it future proof, which gives it a moat to survive against all those competitors. And this is a prime reason where I think that this particular company has a good earning visibility. Now we talked about what does this company do and how does it earn money. Let's look into the track record of the company. So as I said, this particular analysis will mostly be qualitative. If you just go to screener.com, search for Quess Corp, you will see that their EBITDA margin, earnings before interest, taxes, depreciation, amortization, margin is consistently improving. It's currently at about 6%, I think, and it has been increasing from 4%. Slowly they have been increasing it, and that is a sign of efficiency, managerial as well as internal efficiencies. So Yes, track record has mostly been good. The company is the largest employer, more than 4 lakh employees work in it. When it started in 2007, about 1500 employees were there. Imagine the kind of scale that it has achieved, and it is growing very fast. Last year, it had close to 3 lakh employees. It added 1 lakh employees in just 1 year. Okay, so growth is there. Uh, yes, we talked about the management quality, we talked about the track record. Now let's look at some industry trends, evaluations and all. So the flexi staffing industry, this particular industry, is growing at 23%, is expected to grow at 23% CAGR in the next couple of years. And this particular company, being the major organized player in this industry, is expected to grow a lot, maybe faster than that, because there is a lot of consolidation happening. Government is bringing in a lot of laws, a lot of rules and regulations, which will help this company to improve its performance, to capture more part of the market share. Currently, about 50 lakh flexi employees last year were there in India, and out of that, about 8% of them was supplied by this particular company. If it grows by 20-30%, actually it has been growing at that rate, 20-30%. So the kind of market share that it can acquire is quite big. Okay, so positive thing. This company has a global presence, which is another positive, because being present globally, it diversifies your risks. Now coming to the core reason, why is this stock beaten down? Why has it fallen from 1200 to just 207 rupees, and whether you should buy it or not? So there are two reasons that I can find of, and first reason is the coronavirus pandemic. Before coronavirus, the stock used to trade at 500-600 rupees. What happened with coronavirus is, especially in terms of flexi staffing, the companies which employ these people, they have a lot of flexibility in terms of firing them. There is no firing cost at all. So a lot of offices are closed. So a lot of contractual employees, they have been laid off. Simply, they have been laid off. So this is a huge hit for Quess Corp. And in the coming quarters as well, the prospects do not look very good. The lockdown is still being continued, and it might continue for quite some time, and the offices might take a lot of time to resume working at the kind of level, at the kind of employee strength that it used to run at. And these companies are going to definitely take a hit. You cannot fire a permanent employee. If you have to fire, if you have to do firing, you will start with contractual employees, which could do the least harm to you, right? They cannot protest. They do not have a lot of rights as compared to employees. Of course, they are cheaper to maintain, and they are cheaper to hire, they are cheaper to fire, and that's why the companies are favoring flexi employees, and that is coming out to be the biggest reason of the downfall of this company, the downfall of share price of this company, especially in the recent few days. Okay, so this was reason number one. Reason number two is that the promoter stake has decreased from more than 70% to 73% to just 55%. There could be some reason, but based on the management quality that I analyzed about this company, I do not find any such. Most of the times, promoters just sell off their stakes to raise more money to expand their businesses, or sometimes they also decide to venture into other businesses. Latter is not the case with this company. Probably they are selling their stakes only for internal growth, and that's why I think it's not that negative to take a hit of 80% or 50%. First, the stock went down from 1200 to 600 levels, and then it came down from 600 to 200 in the coronavirus period. So yes, this was about the company. Coming to the valuations, the company's 5-year PE was used to trade at 29, and now its current PE price to earnings ratio is just 11.5. So a discount of 30-40%, more than 40, actually a discount of 18 and I think 70% discount. So a huge amount of growth as per my expectation. If I have a high risk appetite, I'll definitely go and acquire this company. Disclaimer, I did make some buying. There is some support level at the 200 levels, the 200 price levels of this company, and most probably there shouldn't be any sharp downward movement. If the 200 level breaks off, there could be a huge dip in the sales price, and that would be an issue of concern for Quess Corp. Otherwise, the company is doing quite well, and the future looks pretty good after the coronavirus pandemic gets over. The future is quite bright for this company. So yes, this was my analysis, a strong buy call again, but I'm not a CB registered investment advisor, therefore you must consult your investment advisor before making any investment decisions. Please remember that, and do like, do subscribe, do comment, do share. Thanks a lot for watching this long video. Hope to see you in the next video. Bye.